Welcome to TradeTheNBA.com. This is John. This report is for the 24th, and well, here you have it. It's continuing. No abatement whatsoever. We had the continuation with Cyan under. However, you can see now that we talked about this peak before. We're at 460 now. It's pre-market situation. And the previous one, 409. So we finally eclipsed it with shorts. So if we do get a crossover situation here, or even a pivot, we're likely to see a little bit of weakness from that. And plus, we're getting a little bit further away from the ABM. Even though it's trying to catch up, it's still good 30 plus points away. So some fallback into that is not out of the question at this particular stage of the game. Still in positive extremes because the algo's still running hot. And that can happen for quite a while until we see a alteration, but you're already getting a reset of short-term buyers, even within the setup. So that just bodes well for the strength of this move. And you can't call it overbought in the sense that most people look at it. What we see is that we've moved to an extreme condition. That's still the best way to describe it. That's why we have the extreme histogram, because it just lets us know that the algo has made a dramatic move, and as long as it's in the positive in these reds, it can be problematic. But when you have the cyan under the red DOC, it just means clearly that bulls are in a buying spree, and this is exactly what they're doing. And those can go for significant. This is where oscillators and that just completely get out of it. So this plunge of the dollar has just been amazing. I mean, it's been exacerbated. We're way outside the normal parameters where the euro should be. And like I said, it all began back here when, China decided to move. And so it is a question of whether, dollar power is being removed or it's being discounted because of potential inflationary prospects. And some of it could just be, the U.S. is not going to object to this because, again, this is good for trade in a lot of ways. Hurts buying power of people who are traveling, but yeah, some things that you can let go of. Treasury's still way higher than they should be, even though some people consider it oversold. The reality is, unless you actually see rising rates, though we did for the first time see them become a bit more expensive, and that's something the market may end up forcing an earlier than desired Fed move as far as rates. We do have a new Fed boss that was approved the other day too, so things are happening. Everything's just kind of chugging along as far as that goes, but has the move been a little extreme and excessive? It's still difficult to say given how much of an impact tax savings are, and I think that some people are still coming to it. I know now, I heard that some analysts are calling for the 3,000 on the ES, and I mentioned a couple days ago or the other day, well within range given what we've seen from potential power of the move. But oil, this spike, see now we're broke out into new high levels here, and that is going to have its impact, and that will be, I don't want to say the camel that breaks the back. It's just going to be a catalyst to seeing a little bit of price pressure, particularly too then if the labor market squeezes off a little bit. You're already seeing it manifest in the fact that you've already had arbitrary salary increases and things like that from businesses because of the whole tax break. The question is going to be on the revenue side for the government, how much more borrowing they're going to have to do deficit-wise, which will be interesting to see. And you can see gold's responded to it immediately and is going to continue to climb based on that. But of course, we talk about the rise of gold, which usually leads to the fall of the crypto, and that's exactly what we saw early on. It's going to rebound here, but still came off the lows, and it was interesting because you ended up with that similar short signal right here, DSC spread, the crossover, which was the warning, and that happened way high. You get the dip, but then it stayed with it. Didn't really break down too much and did the exact same pattern. That's the problem with time charts. If this were just a regular tick chart, that you would have just had the single signal on the breakdown, and then it would have started. And that's just because things have gotten a little sketchy with their volumes, which is all right. All you did was you went from the high back down to the low, back up to the high. So falling lows, falling highs, in this particular case, flat low, called for a move back up to the high, which has just happened. Once you see rising lows on a flat high, you'll have a call back down to the other side of it. That's how that Fibonacci setup goes. So we ended up with a little dip to that 50%. I pointed this one out as a warning sign that when you get to the plus 13 and you get the crossover of the red cyan below the red DOC, we ended up with the same thing that happened right over here, which was a precursor. We just weren't quite at a peak move yet, and as it continued to break down, though, you can see that's what we got. Just was the same move to the 50%. It was just a little bit slower. The peak out was a little late. It was right about there. And that's just the break of the ABM. And then the problem with this kind of a setup was there just wasn't a whole lot of room to get there. So in this particular case, the ABM was 2840, and then you have the 50%, which is at 36. So it's still a full point move. So if you're intraday trading and doing the scalping in that, it's a decent play. Likewise, again, you had the same configuration, but even narrower, because at this point then you're at 38 with the 50%. So it becomes a risk reward when you're only talking about getting a couple of points out of it. Those are pretty fast scalps. Now we're still back at the peaks, so there's cyan below red, probably going to break out to new high range here on our way to the 2850. Was slightly overbought before, so might have to fill back in on that before it happens, but you're already getting a reset of the steel, so this is going to have more strength, and that's just a testament to once things get in a momentum play like that, you've got to wait before the momentum ends, or there has to be a catalyst to end it. Things definitely look to all be heading in the right direction. Of course, the president's going to Davos, and you haven't heard from any international conflict that we were seeing early on. So for the dreaded winter, things just look like spring or summer. It's the easiest way. The springs come early. No, that's the long and the short of it. I'll post anything as necessary when we have these special situations come up. You can see rising lows. We're starting to develop the flat peak, so as soon as we see cyan breakup, we would expect to return to those lows, or at least to the 50% first, and then break down from there. So, as always, though, trade well. We'll talk again later.